Remember the biggest antitrust case in history? In 1998, Microsoft was found guilty in a case where it abused its monopoly position in the operating systems market. The company was ordered to split in two, but Microsoft ultimately avoided this. Now, 27 years later, Google is facing the same problem, having been found guilty last week of abusing its monopoly in digital advertising. This comes just a few months after the firm faced a similar verdict over its monopoly position in search. So Google is fighting on two fronts, in the courtroom and on the technological battlefield, with other companies that are gradually coming up with better artificial intelligence models that are slowly eclipsing the most famous search engine. The company's shares keep falling into this and are already down 27% since the peak. What effect will current events have on them? In 1998, tech giant Microsoft experienced the biggest legal clash of its history when the U.S. Department of Justice and 20 U.S. states accused it of violating antitrust laws. The main point of contention was that Microsoft had abused its dominant position in the Windows operating system market to stifle competition, notably by integrating its Internet Explorer web browser into the system, thereby displacing the then popular Netscape navigator. The process dragged on for several years and resulted in a decision to split the company in two. This did not happen in the end, but Microsoft was forced to change its business practices. In the short term, the dispute had a significant impact on the company's reputation and stock volatility. Although Microsoft remained profitable, investors began to question its long-term dominance. The share price fell by 22% during 1998. But managed to return to growth thanks to continued optimism in the technology stock market, which resulted in the dot-com bubble and subsequent crash. In the following decade, Microsoft stagnated, not only because of regulations, but also because of its slow response to new trends such as mobile or cloud technologies. Antitrust pressure on the company set a precedent that even the biggest tech firms are not untouchable. Today, a similar situation is playing out around Google, which is facing accusations of monopolistic behavior in the search engine and digital advertising market. Like Microsoft then, Google controls the key infrastructure of the digital world. This time, it is not the operating system, but access to information. The similarity lies in the fact that the U.S. government is trying to challenge a business model built on bundling its own services into a single platform. If regulatory pressure intensifies, it could lead to a reduction in Google's power, a slowdown in innovation, and ultimately an impact on its stock, just as it did for Microsoft a quarter of a century ago. A sharp decline is on the cards. Conversely, a sharp rise in our channel subscribers is in the cards, so join in too, and don't miss the next interesting video from the world of stock markets coming out on Wednesday. On Thursday, a federal court ruled that Google has an illegal monopoly in online advertising markets. The ruling, which followed a September lawsuit that threatened to split the company into several parts, marks the second major antitrust blow for Google in less than a year. In August, a judge ruled that the company had a monopoly in its core market of Internet search, the most significant antitrust decision in the technology sector since the case against Microsoft more than 20 years ago. Google is in a particularly precarious position as it tries to simultaneously defend its core business in court and fend off an onslaught of new competition from the rise of generative artificial intelligence, most notably OpenAI's ChatGPT, which offers users alternative ways to search for information. This is evident in Google's revenue growth, which has cooled in recent years, and the company now faces a potential slowdown in ad spending due to economic concerns over President Donald Trump's sweeping new tariffs. Parent company Alphabet will report first quarter results this Thursday. As always, you'll find a summary in the flash news on 𝗕𝗂𝗶𝗀, along with commentary from other investors who follow Google closely. Alphabet's stock price plunged more than 1.5% on Thursday after the court decision was announced, and is already down 27% this year. Thursday's ruling said, among other things, that Google's anti-competitive practices had substantially harmed publishers and users on the web. If regulators forced the company to divest parts of its advertising technology, as the Justice Department had demanded, it could open up opportunities for smaller players and other competitors to fill the void and gain valuable market share. Amazon, for example, has been growing its advertising business in recent years and could take advantage of this opportunity. You can find out how Amazon is doing now in a jiffy at 𝗕𝗂𝗶𝗀. Its cloud business has been booming in recent years, and that has driven its share price up. But you can see if they are still at interesting prices in the fair price index on 𝗕𝗂𝗶𝗀. where you can find thousands of other companies today based on DCF and relative value calculations. So be sure to check it out. Court proceedings on remedies, which will determine the consequences, begin this week. The Justice Department is seeking to break Google's Chrome browser and remove exclusive agreements, such as the one with Apple that specifies Chrome is the default browser on these devices. The company stands to lose much more materially if its advertising business, which has long been its main source of revenue, is broken up. We could see several companies emerge from the original Google. This has happened in the past. More than 100 years ago, the biggest monopoly in history was broken up. Standard Oil. This company controlled up to 90% of the U.S. oil market. It used unfair business practices, buying up competitors and creating its own market conditions, all of which eventually led to the company being broken up into 30 smaller companies. Owner John D. Rockefeller was the richest man on the planet because of it. There's a new video coming out on Wednesday, so be sure to subscribe so you don't miss it. Can Google end up like this, or can it defend itself in court? And what effect do you think it would have on the stock price? Let's discuss it in the comments. Good luck with your investments.